Welcome to Let's Get Real with Jill. I am your host, Jill Van Dusen, and thank you so much for joining my weekly podcast. Here I actually have a lot of community leaders, people who make a difference in our community, and so that's why I have Rusty Mendoza with Partners Mortgage. Rusty and I have been working together for almost 20 years. Welcome, Rusty.
Thank you, Jill.
So Rusty, I wanted him on because the hot topic is always real estate and interest rates. And the reason why I wanted Rusty is because, well, first of all, he's full of knowledge and has great experience, but not only has he helped me personally with my loans and equity loan refinances, but also my family, my friends, and of course our clients. And he has made a difference for people who are dreaming about home ownership. So what I do before we get started is I just want to explain, Rusty, what I admire about you. And from day one is Rusty is not about a transaction. You are about a relationship for life. And you are about creating a path for people, not only to buy a home, but maybe to buy a second home or an investment property. So you don't just look at it as here and move on, you look at them for a life.
Absolutely, absolutely.
And now we are on our second generation of helping.
We are.
Oh, yeah.
Yeah.
Yeah, so thank you so much for joining.
Absolutely, thank you for having me.
So let's go ahead and just jump right in, because the hot topic, as we know, especially since interest rates have gone up over the last couple of years, talk to us about interest rates. Here's the question I always get. What is today's interest rate? Is it going to go down? What's going to happen in 2025? Can you tell us a little bit about that?
Yeah, so we have began to see rates come down for a long time these past few years, ever since we came out of COVID. Mm-hmm. Rates went up as high as 8.25%. Yeah. But lately, we've been trending down to the mid sixes and even touching into the low sixes, which is the low point on the year. So we are in the low point of 2025 currently, and rates are hovering around 6.5 to 63 rates right now.
Okay.
So mid to low sixes for a conventional 30-year fix. And you know, it's a great time to buy. People are starting to see payments more affordable with the rates having came down, and there's starting to be more activity. So
okay.
Yeah.
So we were over 8% at one time, and then at one time we were like at 2.5 to 3%. So often I hear people saying, I'm just gonna keep waiting and waiting. Do you hear that too? I don't know what they're waiting for, but.
Yeah, you know, it's an arbitrary point in time in which I don't think a lot of people are 100% clear on what they're waiting for. Is it waiting for financial situation to change? Okay, mm-hmm. If so, let's get clear on that, and let's make it a definite point in time and what that financial situation looks like before you move forward. Is it waiting for a certain payment? That's still a little bit tough because, you know, we don't know what prices are going to do.
Right.
And if prices go up to a point, you know, rates may never allow that payment to become a reality. Is it about having a certain down payment amount? Okay, you know, let's talk about that. You know, are there other ways to get there and allow to get into a house without having that much down payment? You know, let's look at those options, right? And so I think it just takes having a thorough conversation with people and showing their options today, getting clear on what it would take for them to move forward, and then having a plan. Oftentimes people don't have the facts straight, and that just kind of keeps them stuck in this waiting without a real clear definition of what they're waiting for.
Right, and some people will be like, well, we're waiting for the interest rate to go down, but they're not looking at the full picture of, you might be able to afford a mortgage payment, but you may not even know what you can afford. So those are those misconceptions out there. And I think though too, this is a fact of life. This is where we are with interest rates. If we ever see 2.5%, 3%, 4%, something probably went wrong in the world. COVID 0.2, I don't know, 2.0. So I feel bad because you and I know and see, but we've got to get people off the couch to have that vision. So, Rusty, what would you recommend if people, well, let me go back first to first-time home buyers, because a lot of people out there may have had some hardships financially during COVID, for example, and they sold their home. What is the definition of a first-time home buyer?
Technically, it's someone that hasn't owned a home in the last 3 years.
Okay, that's a big deal. All right. So you guys, if you sold your home 5 years ago and it could have been a divorce or whatever, there's possibilities for first-time home ownership advantages. So what would be an advantage for today's first-time home buyer?
Depending on their income and depending on where their credit is, there can be some advantages and leeway with the credit score that allows the a reduction in rate, even though the credit score isn't perhaps the best.
Okay.
But main thing about first-time home buyer benefits is trying to help the segment of the population that is below, is that at the median income or below the median income?
Okay.
So, you know, in our area, that might be, depending on the program, as high as 170, 180,000, and then other programs below 120. So, I mean, it still is decent enough in terms of high enough income to afford, and opening up that avenue. But yeah, if you've got a first-time home buyer that's below the income limits, down payment assistance, reductions in interest rates, possibly grants, all sorts of benefits.
Okay. And people aren't going to know that.
Right.
And also people don't realize too how important it is, because they'll be like, well, I got something online and it says it's 6%. Well, or let's just say 6.5%, whatever it is. But their credit hasn't been pulled, their income taxes. So people just have this delusion also of not reality, because there's so many different factors that play into that interest rate.
Absolutely. Yeah, and you touched on, you know, interest rates, right? And rates that where they were a few years ago and where rates are now. I think it's important for people to remember and take a look at the big picture, is that from like 2009 to 2021, 22, that was an abnormal time in the world where rates were below historical averages. We're right now at 6.5 is pretty much where rates have always been.
Okay. Oh,
And so, you know, we hear the stories of our parents and grandparents buying their first house and interest rates were 18%. You know, that was a point in time where that was the reality, but they made a decision, got into a home, the home went up over time, they reduced their interest rate by refinancing when periods of lower rates came about, and, you know, provided ultimately, hopefully, in most cases, a very sound financial decision for themselves and have helped themselves in old age because of that. So, you know, our reality today is pretty good. I mean, a 6.5 interest rate is not bad. You know, that's great.
Yeah.
And is there going to be opportunities in the future where rates will go lower? Absolutely. You know, and if you've already bought the house and secured the price, you get a lower rate in the future, you make your home that much more affordable for yourself, and you continue to pay it off over time. So.
And the nice thing is, because we have seen an increase in listings, the buyers now have more choices, so they have a little bit more leverage with competition out there. But what I have found, and Rusty, you probably see this, is people who they have great jobs, good income, and they are spending a ton of money, let's say on rent, and they're like, okay, we can probably go buy a house, I don't know, maybe 3 months, 6 months, a year, but we're gonna keep an eye on the market before they even talk to you. And then all of a sudden they're driving to an open house and they call and they said, we need to put an offer, and we know it's one of those homes that are going to have multiple offers. When should people begin talking to you? Because we cannot put the cart before the horse.
Yeah, well, for one, it's just important to have a good understanding of their options and how the mortgage fits into the financial picture. And having that understanding is empowering because you know what you can do and what you can't do.
Yeah.
You know what you have to come up with in terms of cash to close, you know what the stipulations of that are. And with that, you get empowered so that way when you're keeping an eye on the market, you know what you're looking for. And for most people, they know when they see it because they've already gotten their answers, they already know what they can do, and then it makes it such an easier process rather than, oh, we love this house, let's get an offer in, and then, whoa, we don't have that much cash. We didn't know that we have to come up with that much money. We didn't know our payment was going to be that high. Never mind, right? It's a lot of wheels spent for nothing in that situation. So if you want to keep an eye on the market, what I recommend to people is get pre-approved. If it's not a full-on, we are doing this, it's just kind of like we want to see, then there's the option of a soft inquiry where I would run your credit and the inquiry doesn't even show up at the credit bureau. So no hit to the credit score whatsoever for an inquiry. I get all the information on your debts and I'm able to put together a sound pre-approval that you can count on without ever having checked your credit. You know,
that's it. And people have a misconception on that. Oh, I don't want them touching my credit. It's going to affect my credit score.
Right.
Yeah.
You know, so soft inquiry solves that concern. At the same time, gives them the information they need to go out there and look at the market with sound understanding of what they can do. If that does happen to be a situation where, like, we found a home, we want to go under contract, that's when a full credit inquiry comes in. But that's the purpose.
That's
of
right.
You know, you basically
or never get a home.
yeah. You save your credit for the times when you need it, and buying a home is obviously the biggest time and when you'll need it, unless you're born with a trust fund or something that you can write a check for.
Right.
So, soft inquiry is a great option, especially for first-time home buyers or perhaps people that are wanting to maybe move out but not quite sure. Depends on the house, depends on the situation. Soft inquiry.
And you know, you bring up a good point too, because some people are just, maybe they're not first-time home buyers, but maybe they're thinking, and what the conversations that I'm having with a lot of clients are, well, I know we had another baby, or we want to change school districts, but we have a great interest rate. And I'm like, okay, so you're going to stop your future life and be married to your interest rate. So what can we do to have those conversations with people to encourage them? I mean, I get it. But they're also increasing their lifestyle and quality of life.
Yeah, absolutely. You know, for those situations, congratulations if you're one of the people out there that have a 2.5%, 3.5% interest rate, somewhere in that range. You know, that's phenomenal, right? That's a once in a lifetime opportunity in which you got almost as close to free money as you can get, and that's a great thing, you know. But if you have a real lifestyle need that needs to be addressed through a new home, you shouldn't feel stuck. There's options and ways to make it work. Rents have gone up tremendously, and oftentimes I see people will never want to get rid of this rate. Great, don't get rid of it. Rent your house out. Keep the house, let somebody else pay your mortgage off.
Great
you have the financial
point.
means to buy another house, go buy another house, get yourself in a situation. You didn't give up the rate that you had. You let someone else pay that mortgage off for you. You know, you got a nice and appreciating for you in which someone else is paying off. And then you can take your family's needs and put them into a new situation.
That's a great option for people. Yeah. And they'll probably be making so much money because rents are so expensive, and you have that low interest rate. So that is a great idea. So we don't want to be married to our mortgage, and so you provide options. The other thing that I really want to emphasize with you, Rusty, and I know you're working with all types of financial, I guess would we say, differences. And you have helped so many of my clients. One, I think, just had their 2-year anniversary. One had another 1-year anniversary. And they're both named the same, actually, Craig and Craig, which is really funny. So it took over a year, but you helped them plan out with patience. So Tell me a little bit about that. Why somebody, even if they think, there's so many people, like even in their young 30s, I'll never be able to afford a house, or at 26, 27, and they have jobs. What do you do to help them get to home buying?
Yeah, I help them create clarity, right? Looking at exactly what it would take to be in a house, where they're at right now, and then we move the needle from point A to point B, one step at a time. Whatever those steps are, there's a process to be able to get there. But, again, it all comes back to you don't know what you're moving towards unless you know what you're moving towards. So we have to be able to have a plan, and then we have to be able to set some objectives, set some goals, and to work towards it. And then, just about anybody is capable of doing that if they put their mind to it. So just laying out the facts and helping people. And, the reason why I do what I do is because I love helping people. I mean, you could just call me a rescuer in some cases.
Right?
But I mean, I become very involved with people's situations, and I take a lot of pride in seeing them succeed with the advice that I give out and helping them. It brings me joy, and it's why I've been doing this for 26 years.
You're just a boy. Or you were then. And Rusty, I'm glad you brought that up, because you really are passionate and you understand the person, what their situation is. And I'll bring this example up, what I was just talking about, who I'm so proud of, my nephew Craig. It will be 1 year since he bought the house in like September, October.
Yes, it was November of last year.
November of last year. And it took over a year and a half. And you sat with him and now his wife, Josie, but you put a whole plan together, and he was on a mission. Like Craig was on a mission, and there was nothing that was going to get in the way. And you told him, here's where you are. Here's where we need to fix your credit. Here's what you need to save. And I would get text messages from him. Okay, I just paid off this. I just saved this. My credit score went up.
I just got my new raise.
Yes, he would do. Yes, he would do that. Yeah. So I just think people think that they can never get there, but they really can. And start with Rusty Mendoza. And I remember when I was going through a divorce, and look how you helped me. This was 2007. And I bought this house. That was, and you had so much faith in me too, Rusty. And I was scared because I just got into real estate, so I barely had a year and a half under my belt. And you really fought for me, and look at where we are. We're sitting here in the studio.
Yes, exactly.
Years later. So thank you for that. Is there any advice that you want to provide to people, or what if people have equity in their home? Is there anything that they could be doing with the equity in their home?
If there is a financial hardship, or I should say, a lot of people right now have had a period where they accumulated debt over the last few years, and equity is a 0% return by itself, and if you're paying 15, 17, 20% on debts, right? There's a simple way to use your equity and pay off those debts, save a lot of monthly cash flow by consolidating them. So that's one thing. But ultimately, equity can sit there and wait until there's a need that comes up. But that's the good thing about people that have bought homes a while back, is that most people have a lot of equity right now. So if they're in a situation where they've got a great rate, they've got a lot of equity, but the family's growing, they need a bigger house, or they want to get into that school district, or whatever the situation may be, and they don't want to get rid of their loan, well, you can take an equity line on your house, take some of that equity out. Let's keep the total payment on the house within reason of what the house is going to rent out for, so somebody else pays off your equity line, pays off your mortgage, and then use that equity to go buy your next house. So those are two examples where I'm seeing people use equity, is to go get the house they need, or to consolidate some debt.
Okay, thank you. Do you have any advice for our home buyers out there?
For home buyers that want to buy a house, I would recommend getting clear on what that looks like and getting clear on what that plan is, and having the definite milestones that are being worked towards. And I'm always for a conversation with people, so just give me a call and let's talk about it.
And you know what? Conversation, totally important, because there's so much stuff online that this is one of the biggest investments somebody will ever make. Have a conversation, please. And you are so good at meeting face to face also. We've done that many times too. So I really want to emphasize, make sure you do that. It's one of the biggest investments that one will make. And then another thing that I wanted to add too, but you and I are really good at having these conversations, is if you are buying a home and you're in contract and you have a loan, do not go and do not say, oh, I'm in contract, we're closing in a couple weeks, I'm gonna go get that car I wanted, or I'm gonna go buy all new furniture.
Yeah, wait till closing.
Yeah, and explain to people why they have to wait, because they're getting the house. Why do they have to wait?
Well, because right before the loan docs are drawn, a credit refresh, not a new inquiry, but a refresh on the existing report is done by the lender to see if any new inquiries have shown up, if any new debt was taken, if balances have increased, and if any of those things are true, now we got to go back to underwriting, get the additional information that's needed to have an accurate picture on the new liability situation, make sure qualifications are still intact, and then get a new approval, and then move forward to loan documents. So if we're at the 11th hour on the closing, and then now these new inquiries and new debt show up on the refresh, we're supposed to be signing docs tomorrow. Well, we can't now because we have to go back to underwriting. So that could potentially cause the escrow to fall out. That could potentially ruin the plans of the seller if they're buying the other house and delaying.
Yes.
It's just it starts the process over.
Right.
Not all the way over, but it moves it back a couple steps. And now we have more work to do before we can get to the finish line. So yes, save all inquiries, save all new debt until after closing, and you have the keys in your hand.
Right, thank you, yes. And then one other thing too that like our clients this year, they told us they were getting married, so you were able to plan because we were in the middle of their approval. But what happens if, because this has happened to us before, we're moving forward, and then they get married, because that could affect it too.
It can, right? Depending on the type of loan that we're doing. If we're doing a loan where the spouse's debts need to be in the picture, and perhaps the loan was just in one person's name, and then they get married mid-process, well, now we need to bring in all these other debts that weren't in the pre-approval picture, right? And then now that could change the picture significantly. So, yeah, all that sorts of stuff. We try and get in front of and adjust and make sure that they know what they can do and can't do before you go into contract.
And you know what, Rusty, the company you work for is amazing. Your back office staff, I love Fran, she's fantastic. You guys work so hard for each client. And I do want to say this, and you work with some of these deadlines that we have to make. But when is Corey's birthday? When's Corey's birthday?
January 28th.
Okay, so we met, I think, on January 26th, maybe. You met with my son Kyle and his fiance Alyssa. So I think that was January 26th, and by February 14th, we closed escrow.
Yeah, that's right. They weren't even thinking they were gonna see. That example right there is what happens when people finally feel empowered because they got the information they need.
Yes, yes.
Kyle and Alyssa thought there were going to be months, perhaps, if anything, in 2025. But then they meet, they get the information, they get clarity. They're like, oh my gosh, we can do that. And then 2 weeks later, they're in contract. Yeah.
Or they closed February 14th.
Oh, we closed.
They closed.
Right. Yeah.
So because they had clarity, you sat with them, went through everything. They're like, wow, this is real. And then they were out that Saturday or Sunday. They're looking for homes, and we closed February 14th. And actually, you closed like 3 or 4 days earlier. You had like a 14-day close, and we closed in 10 days. Way to go. Getting my son and his wife a house. All right, you guys, thank you so much. Any last words?
I do want to share one
Yes.
thing that I think people would love. So if you don't necessarily have to be a first-time home buyer. You can own real estate currently. You just can't own real estate when you go to buy your next house. We have a great program called Community Opportunity Program. There's two ways that this program can go. It can be 100% financing with no mortgage insurance, so kind of like a VA loan, but it's a conventional loan. So 100% financing with no mortgage insurance. Or you can do an FHA loan where you put down 3.5%, but you get $10,000 grant to cover all your closing costs, or a $15,000 silent second. That's a 0% interest rate and is forgiven after 5 years. So this is a program in which I'm an ambassador for a bank on, and it's really opening a lot of doors for people. And there's all sorts of ways to make this turn into a great loan program to make homeownership more affordable. There's some stipulations around where the home's located, other sorts of things, but it works great for first-time home buyers, even though technically you don't have to be a first-time home buyer. But yeah, the Community Opportunity Program is opening a lot of doors for people right now.
Yeah, and I even had the community for Lincoln, one of my Lincoln properties that was for a community, that program. So see, that's where people aren't educated to understand, not that they're not educated, but there's so many different programs out there, and you will lead them in the right direction.
Yes.
So we really need to emphasize that program because that's a big deal. Rusty, thank you for joining me. I so appreciate you.
Yeah.
Are we gonna do this another 20 years? You won't be, I probably so won't be. All right, you guys, thank you so much for joining Let's Get Real with Jill. And as you know, this show likes to highlight people in our community, just like Rusty, who can make a difference in people's lives. And if you've missed any of the past shows, please go back to YouTube, subscribe to my Spotify podcast, because there was a couple of missed episodes that I think are going to be super impactful, and that's regarding human trafficking, yes, in our area with Ken Burns, and then child custody battles. If you know of anybody, please have them go back and watch the episode with Terry Moore, because you guys, Get Real with Jill. This is what this is about: hot topic conversations, community leaders, people who make a difference in our life. And if you know of anybody that you would like to see on the show, please let me know. If there's a hot topic you'd like me to discuss, besides the hot topic of real estate and interest rates, I would love to know that as well, because this show is really for you. Thank you so much for joining Let's Get Real with Jill. And remember, you have no idea what people are going through in their lives as we exit these doors today. So I will tell you, make a difference by smiling at somebody today. Your smile will make a difference in their life, and I promise you, their smile back will make a difference in your life. All right, you guys, and I will see you next week. Thank you.